One common question people have when considering a micro-investing app is about its legitimacy and regulation. We're going to look into Raiz, the investment platform popular for roundups and micro-investing, to answer exactly that. Raiz Invest Limited is an ASX-listed financial services company in Australia. This is a significant point, as being listed on the Australian Securities Exchange, ASX, means the company is subject to continuous disclosure obligations and general corporate governance requirements. In terms of regulation, Raiz and its subsidiaries are regulated and overseen by the Australian Securities and Investments Commission, or ASIC. ASIC is the independent government body that enforces and regulates company and financial services laws, aiming to protect Australian consumers. Raiz holds an Australian financial services license, which is mandatory for providing financial services like advising or dealing in financial products. Furthermore, a critical safeguard is how your money is held. The assets associated with your investments, like ETF units, are held in custody by independent, reputable trustees, not by Raiz itself. This means that if Raiz were to cease operations, your assets are held in trust and should still be returned to you. Raiz also employs bank-level security measures like 256-bit SSL encryption for data and multi-factor authentication for accounts. They also have systems to monitor and alert users to unusual account activity. So, is Raiz legitimate and regulated? Yes, it is. It's an ASX-listed company, regulated by ASIC, and uses independent custodians to hold client assets, which provides layers of security and oversight for investors. Always remember, though, that regulation addresses the structure of the company, not the risk of the investments themselves, which can always go up or down.